Are stock market insiders starting to sell the stock market? Well, it turns out that the CEO of the biggest asset manager in the world has begun selling again. The last time he did this, 2020, just before the crash. Hello, ladies and gentlemen, and welcome back to the weekend special edition here where we talk about stocks, commodities, and cryptos. Today, we discuss fallen angels and credit tightening. What is the Federal Reserve doing, and what moves has it made over the last couple of weeks that could be disturbing for markets? We'll also be discussing earnings week. Microsoft, Amazon, Google, just to name a few, implied volatility on these stocks is going to spike. And if that isn't big enough, we also know that the market's just closed as a long leg doji. Indecision at a critical zone. Surely we get a big breakout coming up. Let's get into it. Well, welcome back everyone to the Daily Show where we talk about markets around the world. As per usual, we'll start with the lead indicators, the macro analysis, and then we'll get stuck into the key hottest levels for all the charts that you like, including indices, commodities, cryptos, and of course, the cash markets. Let's talk about fear and greed. So we saw this reading at about 70. Now it's sitting at about 65. It's starting to drop as the markets go into a bit of turmoil this week, but it's still on that kind of greedy side. So of course that leads into being cautious at this point. So what did we mean by one of the biggest CEOs in the world selling? Well, it turns out Larry Fink, who's the CEO of BlackRock, has begun selling positions again in the market. And it's really one of those things that I guess you go and you pay some attention to because he doesn't sell that often. And when he has sold, markets have tended to dip afterwards. If we go back over some of these stats, of course, he sold back famously in 2020. He also sold over here back in July of 2020 and then probably got some extra stock that came through after that drop that happened in September. And then we have one little sell back in 2022 and a much bigger one that's come through here in 2023. So does this mean anything? Well, as Gavin says here, back when he last sold, the markets went down about 30%. I'm not sure that it's going to be anywhere near that drastic. However, it is just another insider selling a biggish portion of their money, and it shows us that we need to be a little bit cautious around this current bull run. Let's talk about sentiment though. This is retail sentiment here. So most people are confused. We can see that by the neutral readings being some of the highest on record. We also know that people have turned less bearish over the next 6 months, which is interesting considering the data that's coming out, and a little bit more optimism filling into the market. Now it's good. If you're a bear and you get a lot of this green, and this green goes to like 35% plus, and you're seeing a huge amount of neutrality, which we are at the moment, and less bear, then that usually means that it's one of those times where complacency is coming in. And this comes back to the VIX or the volatility index as well. Where are we? Underneath 17. When we're down that low, basically it's a greedy market and the market has normalized. You would not be stupid to think that maybe we're in a new bull run based on what the volatility markets are telling us. Let's move over though to probably one of the most important, maybe the top 3 important things that go on with the markets right now, and that is central bankers. So effectively, the Fed here has been supporting the market since the Silicon Valley Bank and Credit Suisse crisis. Now, they've started to take the foot off the gas, and they're starting to taper those assets away after realistically increasing it in the market. Now, I told you I'd update you on this and some flow starter last week. So here is my own updated version, which takes into account a whole bunch of interbank liquidity feeds. And you can see we just got a new low. Now, this tends to lag. So let's say the markets did end up going up higher and this continued to come down. Around 2-week lag is usually what I find on this chart. So effectively what could happen at that point is if you get the markets going up and this keeps going down, it would make a very strong case to be very, very bearish actually at that point. You can see also how central bank liquidity, when you take into account my version of it, really shows you how the markets have sat around 4K and a few hundred points each way for so long. It's been almost like a yo-yo. They pull it down, they pull it up. They pull it down, they pull it up. So no wonder we get price action like a kangaroo when you've got central bankers doing this type of thing. Let's move over though to what the Federal Reserve wants and what they're actually getting. So fallen angels are on the rise. Basically, US blue chip bond downgraded to junk on track for the highest since 2020. And this usually means a lot of banks are going to stop lending, credit tightening is coming through, and many companies are going to start to feel the pain. In fact, this is what the Federal Reserve wants, and I expect many small businesses that are unprofitable to die over the next 6 months to 12 months. So bankruptcies spike amongst small private companies. You can see here the average number of company filings for bankruptcies each week is on a pretty significant rise. It's now the highest it's pretty much been since 2019. And what this is showing us is that there's going to be a significant fallout that's going to keep coming through. High interest rates plus the ability not to refinance is going to take out many companies, and I expect that to put a big drag on the economy as well. However, this is what the Federal Reserve has been doing. You can see here more small businesses are having difficulty getting these loans, and that's starting to spike back up, similar to where it was during, of course, the beginning into the global financial crisis. It's really a thing that generally happens around recessions, and we know that. So if we have a look at this chart, it actually can really explain what's occurring right now. So this is the average S&P 500 return around recessionary bear markets, and it also shows us some of the periods of time and where we're at right now in terms of where a recession is called and where the markets end up bottoming off. So we've got a curve steepening. We know that we've kind of hit that curve steepening, and now in recent weeks since Silicon Valley Bank, we've basically seen that kind of dropping a little bit. We know now that credit is tightening, and of course, we have to expect a pivot from the Fed after maybe 25 basis points, and then they most likely will start to cut. Now, the thing is, though, this is where the Federal Reserve and the market are disagreeing. The Fed says we're not going to cut until 2024. The market says you're going to cut multiple times by the end of 2023. So which one will it be? Well, I think a lot of it has to do with how bad does this chart get. So we knew that the GDP was going to get hurt. Basically, the Fed's been doing that with higher interest rates. But now we've had these bank crises. We know tighter credit conditions are starting to come through. And what should then lead to is more people being probably sacked, less people being hired, and overall just a bad mood that's going to push down the US GDP. So they've already said a mild recession is coming. I think that the stats are kind of there towards it. So have we found the market bottom? Well, there's some reasons to say yes, some reasons to say no. But one of the ones that generally has been correct has been money market fund asset flow. You know, don't listen to what they say, listen to what they do. And what we're seeing here is huge amounts of money continuing to jump into money markets. Now, when this occurs and when it actually tops off is usually synonymous with a new bull market. And I think that we need to be looking at this chart incredibly closely in 23. And don't worry, we've got you covered here on FX Evolution Community because, of course, we need to know when the money market fund assets make a drastic change. If that happens, usually the bottoms of the markets are in and we tend to move around. Remember, we follow what they are doing, not what they're saying. And that will make even more sense when we look at the flows that are going on right now in markets. So let's talk about S&P 500 component correlations. What's occurring here? Well, we're continuing to see a lesser amount of companies coming up as the stock market's going up, and breadth across the board is very, very poor. If we look at some of the stats here, the breadth is so bad that it actually shows us back in 1999 before the crash in terms of where the markets are at. So breadth is really bad. And we reported on this. It's one of the only times in history that we've ever seen the percentage of outperforming index 20-day average being so low. So it's just a few stocks that are really leading us up. And guess what? Those stocks are coming out with earnings in just a few days. Microsoft, Amazon, Google, some of these have been leading the charge, especially semiconductors, through the last couple of months. So these are some of the reads we get. They are not pretty. I know it looks like, oh, well, it's still bullish. Yet markets are always generally bullish. 68% of the time, generally markets are bullish. So when you get stats that are under that, you know it's a pretty serious deal. Here's another read. We've gone through this one before, so we'll skip over it a little bit. But let's go into the second kind of problem. Low volatility with very small movements up. Now, when we get that, again, the stats start to look pretty poor. Basically, this is showing us that if the S&P 500 only rises less than 5% over 90 days, while volatility drops over 50%, something is wrong. It's like the calm before the storm. And that's, again, what we're starting to see here in these markets. And then it gets even weirder when you think about how good the buy the dip strategy has been in 2023. One of the best years so far for it, and the 14th best run in ever to earnings season. So we've got a huge run in with huge anticipation of maybe a little bit of optimism, but so far earnings hasn't really shown us that. I mean, Tesla was disappointing, Netflix was mediocrity, and we've just seen the banks that were absolutely brutalized maybe being a little bit better. So really, this is the week that tests the market. And you can see some of the reads around here again. Unfortunately, the kangaroo market seems to be still here based on these stats. When we see these readings in Q1, the stats are even worse. 22% of the time, 1 week later, it's down. 2 weeks later, 56. And actually 6 months later, only 33% of the time has the market been above these key levels. So we've been talking about earnings, and of course, we know that we've got a huge amount of earnings data coming up, and these are some of the big ones, but I love to see implied volatility as well. So make sure that you're always aware of whatever stock you're trading and how big the implied vols are. We saw that Tesla's implied vol was pretty much spot on with that 7 to 10% move. That's literally what happened. We saw that Netflix was pretty spot on, at least initially. And we've got some other large moves coming up this week. So, of course, notables here. Google, Tuesday after the close, over 5% implied vol. Microsoft, my favorite stock in the market, over 4. And then we have Meta, which is expected to be probably in that 7 to 8% vicinity. And then Amazon, very, very similar. So we've got some big implied vols. Obviously, day traders will be going out looking for that volatility move. And if we put it on a bit of a implied kind of concept here, you can see the historic moves versus the implied moves. So actually, it turns out Meta and Amazon have been getting a lot of large trades on them. That usually is kind of giving us a little bit bigger move than we've expected in the past. So certainly if you're one of those people that likes a lot of volatility, they may be ones that you could be looking at. I'm sure you're paying for it in the options though. So what have we seen in rotation? Well, this is where something interesting has occurred. Copper fell down and it kept falling off. Now, copper has been something that we've discussed here since January, late January on the channel. And the reason we're following it is because it shows us the world market health. Now, if you're not familiar with copper, it's often called Dr. Copper, and we'll look at it later in today's show. But basically, it shows us here that things are starting to get a little bit sick, and metals suffered for this reason. So we saw metals, XME, doing pretty poorly. Obviously, the rotation shift was a little bit more towards the defensives through the Friday session. And if we take a look at the 5-day average here, you'll notice that defensives such as staples were out in front. So actually, the best performing market now over 5 days has been XLP. Then we've had some interesting ones in the middle here. Utilities also in that top list. So what that's telling us is the market actually has turned a little bit defensive into this week's earnings. And whenever we go defensive, or at least partially defensive, it could mean huge money is on the sidelines and it's waiting for the decision. And that makes perfect sense when we look at the technicals later on today's show. Now, if you haven't already followed us over on Twitter, I do encourage you to do so. I've posted a couple of things up here, including all of the implied volatility moves this week for holding the market 68% of the time. That's for things like SPY, Qs, Apple, IWM, and also posted a very interesting chart here about zero DTEs. Did you know that retail traders are losing $358,000 a day on average in zero DTEs? And that just shows you there's a reason why binaries were blocked. And also there's a reason why you've got to allow a little bit more time. And I think that the problem with having these really fast expirations is they just enable too much YOLOing, which is not good if you're going to turn trading, investing, any of these things into a business. You don't want to be YOLOing under any circumstances, ideally. Let's get into the charts now, and we'll start with the VIX. So what's going on here? Volatility is low. I mean, it's really low. And it should have already spiked through many things, but it just shows you how it's like the calm before the storm. So much complacency in this market. I'm surprised how complacent it is, but we hit what I would call an incredibly critical level in the last week. This is something I've waited for months. So I expected volatility to spike. We did see it spike up, and I still expect volatility to increase this week. I'd like to see that happen. Let's move over to one of our favorite charts here at the moment, which just shows us the Russell 3000, which is 98% of the US stock market components. And basically it's showing us that only 45% of stocks are basically leading in this case above the 200-day moving average compared to over 70% during the January-February run. So this run just doesn't look the same. It looks much, much worse. If we go over to treasuries, you can see here we've got basically an island reversal. Is that showing us that yields are about to start dropping again? Certainly treasuries, a very interesting point here. I'd like to see them rise back up. We'll find out what they do. Yields, they are very sensitive to that. High yield junk bonds, as you can see, basically flat into this week. This is a potential chance of a double top as well. So if markets do fall off and high yields start to drop through, we could again see increased volatility, and I'd be watching high yields fairly closely this week. I think it's an important chart to be checking out. US 10-year, US 2-year, all the yields that we've been looking at, they've all been going up, and you can see the 2-year is at 4.188. And I think most of this reason is because the market is starting to say, oh, wait a second, the Federal Reserve dot plot says they're not going to cut rates. Yes, they might increase, then pivot. However, they're not likely to decrease rates. They don't care about these fallen angels. They kind of need this to happen. They're trying to engineer a slowdown. Remember, they've already said a mild recession is coming in the US. And I don't hear that. They've only ever said that, like, I think one other time that I can look at in the last 14 years. And let's just say it was just before the global financial crisis. I'm not saying we have something like that. But yeah, I think this is just a market rebalancing back up. And I still expect 2-year to actually drop off over the next 6 to 12 months as we get the weaker and weaker portions of the economy. Was it a bad week for copper? Yeah, it engulfed backwards. So obviously we didn't end up getting above here on copper, and we continued to fall down. This is a really great sign if you're short things like iron ore at the moment. In particular, Australian stock traders may have looked at some of our analysis about Rio, BHP, and some of those others. They've certainly started to weaken. You'll see that they had like a island reversal at the top as well. And copper, if this continues to fall off, it's not a good sign for bullish markets. Usually markets will turn, and especially things like the FTSE and the XJO, that's the Australian market, they tend to suffer a lot during this time. What about the dollar index? Well, it tried to hold up, and you'll see here we got that weekly close below. And I got to say, I don't like this weekly close under any circumstances. It usually just means further bearishness is coming for the US dollar. And there are some ways to look at bull and bear here. I guess I'd still be bearish because the trend is down. And I'm still looking ideally long-term for like that 99, 98, 63. But we can't ignore what has occurred. 1, 2, 3, 4, 5, 6, 7 weeks down on the dollar. It's got to be overextended, yeah? So let's look at the bull case and the bear case. So the bear case is basically we just have to hold this trend line. Under no circumstances should we be allowed to go above 102.21 without instantly rejecting back down. And basically you're looking at shorts through the ranges that it's gotten to over the last week. If you're a bull on this thing, what do you need it to do? Break past 102.21, get through this downward trend line. And once that occurs, basically drops should be met by rallies. And I think that's really the two main cases here for the dollar index. Very interesting point, though not easy to trade through here. Obviously, if you've been selling up here, you'd think, how easy is this? Great, fantastic. The problem is you're not getting that follow through, are you? So I do think that we're probably in consolidation. We saw Goldman Sachs. We saw many, many banks come out and say, oh, well, we've been a little bit leveraged towards the short, but we've kind of deleveraged that recently. Or maybe we can't trust exactly what they say, but overall, it makes sense to the price action so far. So weekly, still bad. Did put in one good week, I guess, with a little bit of green, but I just see it as neutralized round here and probably creating some form of either distribution or accumulation. If it breaches, it must instantly fail here. I've got that as set as a zone. I think 102.21 is a very interesting level for the dollar, and we'll be following it this week closely as we get more information. Let's move over to gold. So this one worked out really nicely. We thought it was short here as of the previous video. It was pretty much sitting on the zone, and it did. And it came down to our trend line, which it also did. Now, the market is kind of now at a point where you could see buyers recommit to gold. I've actually tracked, and I'll put it in the next video, I went and got all of the money management flow for gold and for the stock markets as well. I can say that gold has decreased slightly, which I expected it to. And if it does go through this low, what I'm kind of looking for then is a pickup back into this zone. And at that point, you'd become a shorter through here. We know this is a very heavily traded level between kind of that 1975, 1980 zone. A lot of buyers, a lot of sellers in there. So if we breach below this trend line, I would be considering the idea of rallies being met by sell demand. You're still barely clinging on to a bit of bullishness here. But yeah, it needs to come off this area right now, pretty much. This is the zone where buyers must recommit to gold if they're going to. And if we go to a weekly, you'll also see it didn't hold up, which we thought it wouldn't. And I expect gold to kind of be ranged for a little bit. So many people talking about it now. Everyone thinks gold's the best. I'm not a hater on gold. I just think we've got to be realistic sometimes about runs. And unless dollar is going to continue falling massively and yields drop a lot, gold could be in a bit of stagnation for this period. Let's move over to natural gas. It had an okay weekly close, ended up going bullish. We've still got this gap underneath, so I'd be looking for something like this ideally. And I do think that, we were very solid on that 2.1 zone. So it's been nice to see the increase. I still feel like we're going to fill that gap fill, which is this box in here. We'll continue to follow along. Oil's a little bit more interesting. Ended up engulfing backwards here. So you can see that false break. Well, is it a false break? Most likely now. And we can see now the rejection. We haven't filled the gap from the OPEC kind of decision that happened a few weeks ago. But I favor at this point, if you're thinking about it from a potential technical standpoint, I'm favoring it rallying and then ideally falling around here. So you can see I've loaded up the most traded zone. I'm starting to stack a bit of confluence through here. So that 80, 66 to 81, very interesting level for day traders and swing traders alike. We made a high, we made a low, we made a higher high, then we made a lower low. So I'm looking for now rallies to be met by dump demand. And basically that's the way we're looking at oil. Let's move over now to the stock market. We'll begin with some of the biggest stocks. Of course, you guys love talking about Tesla, so we'll bring that one up first. Weekly was still weak. It closed below previous weekly closes, which is here. Not a great sign. Didn't close right on its low. So again, if markets do see rallies, I wouldn't be surprised to see a little bit of maybe even a dead cat bounce here on Tesla. There is a kind of case to say, well, it's gapped down. So if it starts to hover here and then one day gaps up, we could see a bit of an island reversal trade towards the bullish side. I'm happy it held this level a little bit because, of course, this is where I expected some buyers to try to buy the dip. I really did, and I kind of expected that before it even hit it. Overall, though, I do feel like Tesla is in a downtrend, and rallies will be met by sell demand. And really, that 145 that we've been looking for what, a month, 2 months, whatever it's been, more than likely is happening. And then also the 120, I couldn't discount that. A lot of it's going to come down to whether the stock market actually turns here to the downside, though. If it doesn't, then Tesla could hold, but I have a suspicion it may. So here are the expected weekly highs and lows, and we'll come back to this as we get more information. But at this stage, we're in a nice little consolidation. I kind of expect buyers to show some commitment there. So is this the real trend line that held us? This is Apple. We know it's the biggest stock in the world. We know it's an important one to do technical analysis on. And we can see here that we have hit a trend line that actually has never been taken out. And the weekly came down, ended up creating a little shooting star pin bar here. So let's have a look at the daily, and then we'll look at the 2 hour. And what you'll see is effectively this market has been going up kind of like an ascending channel. So you can see it didn't actually test the top end up here, but these three, and then there's tons of support. So I'm looking towards a couple of concepts. At the moment, this is actually a little, is it a false break question mark? We don't know. So if the markets go under here, I think swing traders at this point across the S&P 500 Qs, which we'll look at, so obviously the NASDAQ, and then so many markets, if this happens, these will be double tops across many, many stocks. So at this stage, you'd have to think that it's more weakness than bullishness when Apple is sitting on the most important trend line it's had all of the last 18 months, a long, long time now. NVIDIA also in this kind of consolidatory period. Is this distribution? Is it accumulation? We've got one last spike to go up here with this watch reaction level. These are all questions we're asking. We know NVIDIA's been on a massive run. The word AI, I'm almost guessing. I wouldn't even need to guess. I'm sure AI is going to come out a lot over the next 2 or 3 weeks. where every company is going to be like, we've instigated new AI in our businesses to try to get the markets to pump. I'm not sure whether that'll work. Will it be a buy the rumor, sell the fact? Plenty of gaps left behind by these stocks. This isn't coming out anytime soon. Obviously, we've got 32 days for earnings, but it will come with the rest of the semiconductors as they go. XJO, probably weakness here for the Australian market. We know it's very susceptible to the Dr. Copper, and Dr. Copper looked a little bit weak, so I'd expect the XJO through this point and then probably to go back down to 7200-ish, 7220, 7200, which I've got marked here. So I'd probably expect a little bit of weakness here on the ASX, the Australian market. And the reason why is because it's very susceptible to copper, plus it had a great 3-week run. So I think that will be mostly trading in the copper vicinity. And do remember, we have May coming up. I think I don't know the stat exactly, but it's a lot of companies will have reported, a huge portion of the S&P 500 will have reported by May 5th. So will we get a sell in May and run away or go away like we've had in the past? May used to be one of the weakest months of the year, and it had this historical, as you can say, sayings around it. So we'll look at that, because it could be that this year is actually the sell in May, and I wouldn't be surprised at all. It's been quite a few years since that's actually worked. The stat has been very, very bad for it for quite some time. Maybe it's set to make a comeback again. Let's move over to the Russell 2000. So you can see here one of the most traded zones down at 1747. I'm looking for weakness into that. However, nothing from the Friday market. Another long leg doji. What is this? It's just like long leg dojis inside long leg. I mean, it's no wonder people get frustrated with this market. Could it be setting up for a breakout? Yeah, of course it could. That's the problem. You have to be more towards the negative side when you're at these resistances. But geez, what an annoying market when you're talking about these really tight ranges. Crypto's been amazing, but this market has been very, very tight. Let's move over to the Qs. Again, we don't know whether we're breaching to the upside or downside. We do know we're coiling, and we have to be very patient here with how the rotation's going to go. If the market goes underneath this gap fill, what's that telling us? Well, it's probably making a decision towards the downward trend. The only way it could go under here is if it goes boom, boom, massive wick, then we know the buyers are in full control. And we'd have to look at that and ascertain it when we see it. But at this stage, we're really waiting for that reaction, and we're just having patience and trading in between. Yes, we might have a little bit of a bearish bias. Why wouldn't we at these points with these types of weekly closes? I mean, look at that thing. Does that look good? Not really. Does that look good? Not really. It just shows us, though, that this is such a pivotal point, and the markets are either trapping tons of money in to buy, which kind of looks like what they're doing. You can see each rally is kind of getting worse at the moment, but it's rallying a lot in the mornings and then dumping, then rallying near the evenings. So it's very strange. It's like drops in pre, rallies in the morning, drops a post, like in the middle, and then it goes back up at the end of the day. So the two ends of the day seem to be kind of like buying, and the middle is selling. So how does that look? I'm not even sure yet. So here's kind of the distribution or accumulation. We're still stuck within it, but we're open to both concepts. SPY, let's take a look at that one. You can see the closures here. Look at the daily again, went into an extreme zone. We're floating around. SPX gives us a little bit better idea. So I've written on this 1, 2, 3, 4 gaps, most traded zone down here. To me, it makes more sense to actually go down, and if buyers are there to come off this level, 4K is a big deal in this market, and we know that the market often gravitates to that. And another false week. I mean, it didn't get through this trend line on the high, and we basically see a long leg doji, which is full on equilibrium. The market likes where it's at. If it breaches down, well, it's made a decision. If it breaches up and closes, well, it's made a decision. I hope we get a decision this week and not another damn long leg doji. Let's move over here to the futures. And again, you can see the futures action. Now, the Friday market actually pulled up near the end, creating kind of like a double low here around that 41, I think 41 kind of 15. And the markets then, yeah, they held pretty well. I've got some thoughts on that. So I've drawn a lot of lines, and let me explain them all. So the first one, this yellow one, is actually coming through all of the bottom lows here. So through this entire bull run so far, we've seen this yellow kind of hold up. And that's the first line. Now, do I think it's super critical? Not really, but the market did like it and it bought off it. Then we have this one here, which goes behind those two lows, and that intersects underneath. So if the market does go bearish underneath these, what's the next stop for it? I have a suspicion it's probably 40.90 gap fill. And 40.90 gap fill will get us back into this demand. So it's probably going to look something like this. And if we go down there, I'm suspecting something like that will occur, maybe come back up into here and then possibly sell further off. And I certainly favor that kind of concept at this stage. If you're a bull, especially if you do end up closing down here, because if you look at the daily, we'll just go over the daily and I'll show you it. So here's the daily. See that? You've got those 2 weak rejections. So if you end up closing underneath those, what have you done? Well, you've said, well, whatever buyers were here, they're gone. See ya, demands. It's over. We're now in control. The big bears are in control. So you could make cases to say, well, the market's going to rally through right now. And it kind of needs to if it's going to, because you've got that double wick rejection. It has to go pretty much and pop pretty fast. And of course, once it gets through 41.80 with the close, well, that will change everything about the buyers being in full commitment control. At this stage, though, still looking towards that bear side, liking the idea that it goes back and fills those gaps into 4K. So we'll keep watching it. There'll be updates throughout this week. So make sure you subscribe to the channel because I've got a lot to talk about here. And this is a tricky situation. We've remained bearish in this zone for basically, a week and a bit. And that's just, look, I mean, it's not really not played out. It's played out fine. Nothing's happening. But yeah, there was some great trades. If you got a short up here, there was some amazing day trades. I've written a thing called it's the ultimate day trading class or ultimate day trading masterclass. That particular one did very well in this period, but it just depends on what exactly is occurring. Now, in regards to max pain, it didn't quite get there, did it? 405 was max pain. We ended up at 411-ish or whatever it was. If we have a look this week, we can take a look at it. Now, max pain, of course, is just a concept that you apply to other things. If we go to the 28th, you'll notice 410. So still kind of leading towards that maybe downward spiral kind of market. But you'll notice where have we got the puts here this week? We've got 410 puts. We've got 400 puts, but it doesn't matter in this week very much. Look at that, 734,000 in comparison to millions. And that is very important. Let's move over to Bitcoin. So Bitcoin actually didn't find the buyers. I thought there'd be some buyers in here, and we'll look at it in a second. I'll show you why it didn't activate. But Bitcoin overall, very good short trading. I really personally love the fact that it came up here and shorted. I waited for that for so long. I don't even know how long. Too long to see that zone. And once we got it, I was very comfortable bears would come back in on that. That was a serious level, and it has happened so far. So I've had some people that have done very well. Congratulations to them. 27-1 trades and stuff is no mean feat. So congrats to those people in the community. Overall, though, we probably expected more buyers to commit here. And that's that 28,000 level. Fairly decent zone. Demand on the left-hand side. Quite a stacked area. Didn't quite get the activation, though. So if we go down 15-minute chart and we have a look at this, what you're really looking for here is more likely than not a higher high. So you basically wanted it to do something like this, which is all absolutely good. And then once it did that, I would have thought there was buyers. So yeah, this would have been fantastic. It just didn't do it though. It fell off further. So what does that mean for traders this week? Well, crypto is hard to pick probably right here. You swung this low, so maybe you've done some SLH, some stop loss hunting. There's a case to be made for buyers to recommit through this 27.2 as well. But if we put this in bigger perspective, if this market is unable to hold 26.6, I actually think Bitcoin could be in a lot of trouble and that could be precursoring maybe the markets as well. Because if it gets under here, rallies should be met by sell demand. It changes everything about swing. So swing suddenly becomes down, 2-hour, 4-hour trend, daily trend, all trends go down. So suddenly we switched everything. So instead of just being in like a 2-hour downtrend or like 1 hour or anything like that, we're suddenly in major downtrends across the crypto market. So I'll be watching crypto very closely this week. And I think having alerts underneath these lows will be very important. If buyers are going to commit, well, could be down here. Obviously a lot of wicks through this level. I'm sure scalpers and day traders will be looking pretty closely at that level. But I'd be looking for having some kind of reaction way of looking at markets, making sure the markets are telling you they're going to support it through. Because with crypto, when it chunks, it chunks. I'll never forget the day that Polkadot and others went from like $46. I was live streaming it. I think they were like $12 or $14 in 5 minutes. It was pretty wild. So just remember, anything can happen in crypto. You got to be very, very, very careful. So let's move over now to the big news for the week ahead. So we've got a couple of bank holidays coming out here for different countries, including Australia, it looks like. And then we scroll down and we get advanced GDP numbers. Usually won't move the markets too much, but anyway, they're coming out Thursday, April 27th. And then we scroll down here, Bank of Japan, outlook and monetary policy. That might be interesting. And then we go to the US core PCE price index on Friday at 8:30 a.m. But it's little wonder why there's not a huge amount of news. It's all really about earnings season. Big tech in focus. Oh, it's going to be a big one. And I think we're going to finally get a decision made. Yes, I know, but I hope we do. If you enjoyed today's content and you think you want to watch some more, why not subscribe to the channel? Smash that like button if you find value in today and join the best community here on YouTube when it comes to day trading and investments. Thanks so much, guys. Have a great weekend. We'll see you bright and early next week when we're ready to get involved in this earnings season. Bye for now.